Did you guys end up buying the sale or not? So we're looking at ticker symbol SPY. It generally follows the S&P 500. It's an ETF, and all the general stocks that move the stock market up and down, also known as FANG. We got Facebook, we got Amazon, Netflix, Google, all those big top dogs. They usually move the stock market in general, up or down, depending on where the directions are heading. And actually, all of those were down today, and all the entire stock market was down. So usually, what happens when a consumer sees something at a retail store on sale? What do? They end up buying it. They see the 25% discount, 20% discount. Well, stocks were on discount today. I don't know if you guys purchased any or not. I certainly did. I bought one of the stocks that I've been watching for a year now. I watched it. I didn't buy it a year ago, but I watched it go up, 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 and I didn't pull a trigger because I thought it was overvalued, and I just set a limit order to buy it at a price that I was comfortable with, and I finally got filled. So one reason why you shouldn't never invest in something and anything, the stock market, or just buy in general in something that you don't feel comfortable is in someone else's opinion, because you don't know why they're buying it. I personally bought it because I like the company. I like the CEO. I like what it stands for. I think it has long-term growth. I like their product, and I like um, their culture, basically what it is. And I'll give you guys a hint. It's a technology stock. Currently I'm up right now, so that's good. But I want to hold that one for a long term, and maybe I'll share that with you guys one day. But for now, we could see that the stock market was red. So I don't know if you guys bought any for the sale or not. When they say buy the dip, this could be a dip. You never know. The stocks could keep going down. You don't really know until after they keep going up. That's when you know if it's the dip or not. But anyways, we're looking at, it just depends on how you want to look at it. If you want to look at it as a sale, then you're looking at a positive side. If you were down, actually, you're probably looking at it as a bad thing if you're scared. And then if you're scared, I don't know what you're doing investing in the stock market, because if originally you buy something that's really volatile, or something that you have no control over, you shouldn't really be stressed out about, because you should know what you're getting yourself into. And the stock market, it's not something that it's 100% guaranteed. Nothing's 100% guaranteed. But on the other hand, Spotify is filing for an IPO. An IPO is an initial public offering. Basically, when a company that's private goes public, and anyone can buy its shares. So is this a good thing or a bad thing? Well, it could go both ways. It's a good thing because they can raise money, raise capital, because want to they want to go ahead and um, increase the company's growth. So that's a good thing. Another bad thing that can happen is venture capitalists can see this as an exit. They can go ahead and just sell their shares and exit out of their initial investment in the company. The other thing that can happen with an IPO is that, well, Spotify's IPO, that it has a big dogs competing against them. We got Google, we got Amazon, and we have Apple. So I personally don't use Spotify. I really don't know much about it. I use Pandora, but we could go ahead and take a look at Pandora, see what it's done in the last, since all its growth. It's at $4.09. Its lowest that it has been, and its highest that it has been is $40.44. So that's a huge difference. Now, in an IPO, it's really volatile because it's never been traded before. So you really don't have any trends to look back at, any patterns or anything else like that. So you could just see what investing in an initial public offering can be really volatile. It could go up, it could go down, it could go sideways. You never know. Now, when a company goes public, another thing that they have to deal with is they don't really initially have the CEO doesn't always have the power to make any business decisions anymore. So now the shareholders can decide with votes what goes on with the company, and then they also feel the pressure of every quarter they have to show their reports on their earnings. So it puts a lot of pressure on a company that goes public for next quarter's reports and next year's reports to see how they'll be doing. And if they don't really hit their numbers, it can affect the stock market price. But when they're private, it's not necessarily per quarter, it's more of a long term growth because it's the initial investors and the CEO, the person in charge of the company, basically, who sees that as a growth. But when it goes public, it has a lot of pressure. As we can see, as Snapchat went public about almost a year ago or something, or a little less or a little over, and their stock has just been hammered down. So we could take a look at it real quick. So this is overall general Snapchat. I think it started at 23 to 24 somewhere around there, and it went highs of 29.44, lows of 11.28, and right now it's currently trading at 14.46. So that's one of the public companies that went. It was a private company that went public. Another social media like Facebook, but we can see that Facebook. Now the problem with Snapchat that it's not profitable, but we've seen other companies have gone through that same thing, and Spotify as well is not profitable as right now. So they could be profitable in the future, but no one knows until they show their numbers. But thanks for reviewing this video, guys. I'm glad to show another helpful tip of the stock market, the IPO, and I don't know if you bought the sale. Maybe the sale's not even over yet. Who knows? Catch you guys in the next video.